Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with this range where we're looking for a WXY scenario, within W a flat, X a complex structure, and in Y a zigzag, which might potentially already be finished. Most common target for wave Y is between the 0.618 and the 1.236, taken from the high to the low of W to the high of wave X, which as you can see has been touched. And more specifically, we were looking for two areas in particular, the blue box over here or the yellow box below. And the blue box currently is acting beautifully as support indeed between 41k and 41.4k. Now we are then looking for a zigzag structure in this wave Y, in particular this scenario over here, where we're then looking for an ABC 535 towards the downside. In wave A, we are then looking for an expanding diagonal, wave B finished in this scenario, and then a wave C towards the downside. Most common target for wave C is between the 1 and the 1.236, taken from the high to the low of A to the high of wave B, which as you can see has not yet been hit, but a minimum requirement for a wave C is taking the low of wave A. It is very rare for a wave C in a zigzag to not take the low of A and be truncated and then move to the upside, but that is not the case because the low has been taken, which usually is a minimum requirement over here. Now for a wave C, there is two potential scenarios that you have to think of, because wave C has to be a 5-wave move, meaning we are either looking for a impulse to the downside where we don't want to see overlap between a wave 4 and a wave 1, or we have to think about a diagonal, preferably contracting because expanding diagonals are less common. However, because wave A is already a diagonal shape and then an expanding diagonal, it is incredibly rare for wave C to also be a diagonal, which was pointed out nicely by Stuba yesterday in the comments. So therefore, preferably, we are looking for a normal impulsive structure to the downside and not a diagonal, because that would be incredibly rare, right? Now, if we count this move to the downside in an impulse, then this for me would be the only way to count it to end the move over here. We have a long wave 1, then we have a wave 2, 3, 4, 5. Wave 3 is not the shortest in this impulsive structure, which is a minimum requirement for your wave 3. Wave 4 here does not have overlap with the low of your wave 1, with wave 2 then being a flat structure. And your wave 5 is then a wick, taking the low of wave A. Counting a diagonal over here in this range, right, either expanding or potentially still contracting, is very rare. First of all, wave A again is already a diagonal. Second, your wave 3 in the diagonal, if you think 1, 2, 3, 4, 5, your wave 3 is longer in price than your wave 1, which really lowers the probabilities for a contracting diagonal, doesn't invalidate it, but does lower the probabilities. And an expanding diagonal is rare, plus you already had it in wave A. And also, you need zigzags in diagonals, in an ending diagonal, you need to have zigzags in all of the waves, meaning all of the waves have to be 3-wave structures, but it is very difficult to count wave 1 and wave 3 as solid zigzags over here. Then somehow you need to have this as an ABC, incredibly small c, and this as an ABC as well, also very small c. Doesn't really make any sense at the moment. So that increases the probabilities here that the low might be in and we might see a move towards the upside, right? Also yesterday, we had this line on the chart, right? Very important line. The low over here, if touched, probabilities increase for a 112, a flat, or bullish continuation. So if we then look at the bearish scenario first before the bullish scenarios, then we were looking for this triple 1-2, 1-2, 1-2, 1-2, and then we want to see a move to the downside. Now, a triple 1-2 is rare, right? Especially in the shape that it is forming over here, because preferably a triple 1-2 shows in a bit of a diagonal structure where you have a 1-2, 1-2, 1-2, and then a big move to the downside, where preferably we also see bearish CVD divergences between the highs of the wave 2s, which currently is not the case. We don't have any bearish CVD divergences between these highs over here nor between these highs over here as well. So that also lowers the probabilities besides the shape of the 1112, where the second wave 1 here did not take the low of the first wave 1. And also, if we look at this white wave 2, we are currently here around that target area for your wave 2, but the time for this wave 2 is becoming a bit of an issue, because preferably also your first wave 2 is the longest wave 2 in price and time, right? Because we are talking about Elliott Wave degrees over here. We have the green count in a 1, 2, and then a 3, 4, 5 in green. Inside the green wave 3, we are looking for the blue count, 1, 2, 3, 4, 5, to finish the green wave 3. And then inside the blue 3, we have the white count. So you can see we talk about Elliott Wave degrees here, where green is the highest, blue is middle, and then white is the lowest. So preferably, each Elliott Wave degree is shorter in time and price compared to its higher degree Elliott Wave count. But this Y2 here at the moment is starting to become quite long. If this is the end of year 2 and we would be looking for an impulse to the downside, then this price action from the low to the high here is longer in time than the price action of this blue wave 2, which is not something that you like to see. Now, if one would put this wave 1 on the higher low pivot here on the left, then this is your vertical line on the chart. So then this white wave 2 is still shorter than your blue wave 2, which is okay. However, the moment we take these highs here, probabilities will again significantly decrease. They're not that high already, but they will decrease more for this scenario, as then this whole structure for potential white wave 2 is going to be even longer than this wave 2 over here, which is not what you like to see. So if we then zoom out, that 1112, right, is part of a bigger zigzag to the downside in an ABC, and because the probabilities for your 1112 here are decreasing, right, especially if the invalidation is hit, of course, but that also means the probabilities for your ABC are decreasing when you zoom out and you look at this range where you're looking for a 535 zigzag to the downside, where this is your common target area between the 1 and the 1.236, between 40k and 39k, with the 1.618 also still a target at 37.2k. If we then look more locally at scenarios towards the upside, then the first one here that I like to show you is this flat scenario, where we are then looking for a wave A to the downside, but a longer wave B, and then a C to the downside once more to reach the common target area for your wave C. So we are still talking about this scenario here, A, B, C, but your wave B now takes more time, as it is then a regular flat. The most common flat structure is a wave B retracing to the 1.236, 1.38. Here we retrace to the 1 to the 105 Fibonacci, taken from the low to the high of A, which is the target for a regular flat. Common target then for a wave C in a regular flat is between the 1 and the 1.236, which is a nice confluence with the white resistance box over here, where we rejected once before. But we do have a new level here, which is the daily at 43,400. So that is an area to at least keep in mind, right? And after that wave B, we are then looking for a move towards the downside in a wave C, where we then want to see an impulsive move towards the downside to take this low at least once more. Now, if we look at the CVD divergences and also what is happening here locally, then the resistance mentioned yesterday over here respected very nicely, got a range towards the downside. Now, guess what? Over here, we had the point of control acting as resistance. Where do we retrace to? The point of control of this small range over here. Very, very nice, right? From point of control to point of control, you got a love volume, and price moves towards the upside over here, testing the golden pocket now for the second time, as well as that point of control, right? We had a small little bit of bearish CVD divergences here, which got invalidated, and we had the bigger bullish CVD divergences, which is the green line that you see on my chart as price was moving down. Bullish CVD divergences on the chart while hitting the point of control and the 05 area. Very nice. Price now moving towards the upside, and keep in mind, taking these highs, not good for the 1112, but it is good for the flat scenario or bullish continuation, of course. And that is also then what I like to talk about over here. If we look at the probabilities for me are higher on the medium time frame for the WXY scenario, and then only on number 2 we have a zigzag or a potential triangle scenario. I do realize I did not talk about that triangle scenario in this particular video because for me it is not yet relevant, as it is way too early to call because we're not yet at the wave D area even, right? So prefer to be patient and look at the WXY first. On the micro, meaning more locally over here, right, in this bit of price action, currently the flat or potential bullish continuation has the highest probability. That currently depends on the move that we then get towards the upside, because this is then the bearish scenario actually, where you're looking for A, B, and then a move down in C. But of course, depending on how price would move towards the upside, we also have to think about bullish continuation, where the low for your wave Y might already be in, and you're going to be looking for the highs of the range to be taken here. And then a little bit of a short story here. So I write the probabilities are higher for price to move to the upside here for the flat or continuation to the highs of the range. However, important little bit here, I do like to see price move above the point of control and the golden pocket area over here and close a candle above, right? Over here on the 1 hour time frame, we rejected at the point of control and the golden pocket. We did close candles inside this gap, which is the white box here, right? Increasing probabilities to fill the gap, but I want to see price moving above the golden pocket and the point of control and close a candle there as well. Also take this very local high, right? Which would lower the probabilities for a 1112. That would increase the probabilities even more to then look for price to move towards the upside. We are still below resistance, which also includes this white box over here. It was support before, can turn into resistance as it had shown at least once now, and now we're testing it for the second time. Passing this box, passing the golden pocket, passing the point of control, probabilities increase to look for a move towards the upside in this range, and then we'll take it from there. So I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.